Hey, what's up, all you traders and investors out there? It's Blake with Boost Portfolio, recording on August 2nd, 2017. If you like this video, make sure you click the subscribe button in the bottom right of your screen. It just keeps you up to date with all of our latest content. And also, let me know what you guys want to see. Let me know what you want to learn. If there's something you don't understand, please go to the website boostportfolio.com and fill out the Have a Question form, and I'll be sure to help you guys out in any way that I can. That's what I'm here for. So without further ado, guys, let's get right into the stock market. I have the SPY pulled up here on a daily chart. And we have this chart dating back all the way through October of 2016. So right as we got this boost right here, this is the bump, the Trump bump, and we've kind of held this trend line ever since Trump's been inaugurated into the office. Moving averages are still moving higher. The only thing that I don't like about this setup, as you guys can see, the MACD, the moving average convergence divergence, is has a bear crossover. So that is a warning sign, something to be a little cautious about. I'm not bearish by any means, but at this moment, I don't really see a great opportunity to enter any new longs into the stock market right now. We're just kind of holding our current positions. Now, the SPY is holding this 10-period moving average. That's this blue line, and we're still just kind of hanging out right at the highs here. But we do have this MACD bullish crossover. Apple did report earnings yesterday. They absolutely crushed it. That's one thing that's helping hold this market up, in my opinion. So right now, the SPY is just kind of in no man's land, in my opinion. I don't think it's a place where you add a whole bunch of new risk, and I also don't think it's a place where you take off a bunch of risk either. Just kind of a place to hang tight and see really which direction this market wants to go. Now let's go to the IBB, the biotechs. You guys know I like the biotech sector longer term. If we look at a weekly chart, it's extremely bullish, but I have drawn in some support and resistance lines. This area right around the 315 has held today, and below that we have the 310 area, and below that we're looking at the 300 area. The MACD is bearish. We're dropping lower. If I was to pull up a stochastic RSI, you guys would see this is a little bit oversold. So we are printing a doji candle today. It just kind of opened right where we're closing, kind of an indecision day in the market. But one of the things I don't like is that we are closing below this 20-day moving average, which coincides with that 317 mark with the IBB. So for the second time consecutively, closing below that 20-day moving average. So I would like to see this get above the 20-day moving average before we could really add any longs to our positions. As you guys know, Gilead is a trade that we have going. It's working out very well. So IBB, I don't think this is a place where you add a whole bunch of new exposure. If we can get back above this 317 mark, I would be interested in checking out some of the stocks within the biotech sector. Now let's look at the Qs, the technology sector. Now the QQQ, one of the things that I've noticed when I look at this chart is if you look at the sell days, these big red sell days, these big red candles, and you look at the volume, lots of volume is ticking up on these sell days. So here we have a sell day, lots of volume came in. Here we have a sell day, lots of volume came in. So another sell day, volume coming in, sell day, volume coming in. So it seems like we have some distribution right around these all-time highs, which isn't necessarily a good sign, but as long as we can hold this trend line right here, right around the 142 area, also coincides with that 20-day moving average right around the 142. As long as we hold this, I'll continue to hold our longs within the technology sector. For now, I don't think it's a place where you can really add anything. The reason is because of this MACD is a bearish crossover, and I would like to see this, flattening out and moving higher before we add to any of the technology positions. So that's technology. Let's look at the financials, the XLF. Now this is one of my favorite sectors at the moment. I really think it's ready to break out, and if we zoom out, you can see we have this W, and then it looked like it was going to be a V pattern, but we actually came back and printed another W, and this is a bullish pattern. So I do like this pattern. The MACD is getting ready to cross higher. Actually, it has actually crossed. So we do have a bullish MACD crossover, and we're right at this all-time high. So if we could bust through this all-time high and some volume would come in, that would be a very strong indicator that the financials are catching a bid and potentially moving higher. So keep an eye on the financials. We will go over one trade idea within the financial sector that I did share with some followers on StockTwits and also emailed out to our subscribers. So that's the financials. Let's take a look at the TLT, the bonds. Always something we got to keep an eye on. So last week that I mentioned that we had this sell day right here, and I mentioned that if we got below this low on this candle, which was 122.59, you could probably take the TLT short. We never got there. We hung out right at this trend line again, and we've bounced from there. And now it looks like we're back above the trend line with a MACD bullish crossover. So seems like the TLT is kind of choppy. It's not something that's really trending heavily in one direction or the other. But keep an eye on the bonds. I do think right now it's just grinding sideways and doesn't really know which way it wants to go. Finally, let's look at the small caps. Now, we're back inside this box. This isn't something that I like to see. We've been in this consolidation range really since November of last year. Just kind of been in this range for quite some time. Really no real momentum, nothing like technology or anything like that. The MACD is bearish, and we're back inside this consolidation box. We did break out. I did get long here. I mentioned that if we came back in the box, that would be a signal that it's not a strong breakout. So I did get out. Small loss, but it's a game of probability. So we're back inside this box. I'm patiently waiting for something else to happen within the IBB. I'm sorry, the IWM. And let's go over one trade idea, guys. JP Morgan. This is my favorite setup within the XLF, along with Citigroup. I think both of them are really primed to head higher. Now, yesterday we got long on this candle. We got long above this high, so our trade is green, and our stop is below this red line, this pivot low, and our place to add more exposure is above this pivot high, which would be breaking out to new all-time highs. And above this, there's no overhead supply, there's no overhead resistance, so I could see this, potentially running all the way up to, 98, 99, 100 mark, within the next couple months. So we are long JP Morgan. I do like this trade. It's holding up well today. So that is the trade idea for this week. I do like this. Again, stop is below this low, add is above this high. And just to recap, let's wrap it up with this SPY once again. Just kind of grinding sideways, holding that 10-period moving average. The MACD is bearish, so really not a place where you want to add a whole lot of new exposure. But that being said, we are just kind of hanging out at these highs. So that's all I have for you guys this week. Make sure you come check us out, boostportfolio.com. I'd love to hear from you guys. I'd like to know what you want to see, what you want to learn. There's things that, technical indicators that you don't understand. I'm happy to help you. I'm happy to create videos to help explain this. Please come check us out, boostportfolio.com. Thanks, guys. Have a great week.